Welcome to Layn Stocks. My name's Conrad Layn. I'm a retail investor. I'm not your financial advisor, not your CPA, not your stock investor or stock broker. I'm simply sharing my IPO into initial public offering journey, and also share my stock journey. And this is basically my personal blog. So I'm not giving any advice here, just sharing what I believe is true to me. This is strictly my opinion. I'm not perfect. I could be wrong, but I'm going to share my perspectives. It's been working well for me, so I'm going to share my perspective on stock investing. That's worked for me, people. What I like to do, and what I've noticed by studying the investment industry, is that a lot of people, including hedge funds and especially retail investors like you or I at home, oftentimes get caught up in the whole buying a stock that's a meme stock, or it becomes green or blows up overnight. And oftentimes people lose a lot of opportunities this way, because instead of learning the intrinsic value of a company, like what the company core values are and what makes this company valuable, or why it would blow up or not blow up, or why it would grow or not grow, people just throw their money without even understanding the stock investment at hand. And unfortunately, there's a lot of way that unscrupulous firms can actually take advantage of you. And also, there's a really huge way that a lot of people lose a lot of money where there's no strategy. Nothing's absolute, nothing's 100%. I'm also a mitigation specialist, and again, I'm not giving any advice. That just means I'm a business consultant where I share with my clients on how to mitigate and lessen their risk. And so I'm sharing my tactic that's worked for me. And at the end of the day, where it's part of the game. You're going to win some and lose some, but it's about having a more balanced approach, and that's what this video means. So unfortunately, I'm going to use nature, and I'm going to combine it with stocks. I'm out here in water. I love being in jacuzzi. It really soothes my mind. I like being in water, and then I like seeing the sky at the same time. I'm outdoors. There's a lot of green around me. Green represents nature to me, and green means growth. And that also is the same. It's true. That's in the stock market. So when people see green, they get happy. When people see red, like fire, unfortunately, like, let me walk over here and show you something really quickly. So when you see this, watch. When you see this in the market's on fire. So let me show you this. See that fire right there? This fireplace I just turned on? That's going to turn on and ignite in about 10 seconds. So it's turning on right now. So I just turned that on. That's a fire. This is my fireplace out here. I come out here, read a book, sometimes hang out in nature, look all around. And it's about combining that flame with trees creates the color brown. Sounds crazy, right? Represent that. You can never have fire and redness without green and trees and nature around us. That's fact. Just want to use the fireplace here for an example. I believe in keeping it complete balance when I invest in stocks. So for example, like I'm about to get in jacuzzi again. Sky, water equals earth, right? So that's balance. The more balanced you are, the more you're able to hedge against risk. And again, I'm a mitigation specialist, so I teach balance. The more balanced you usually are, is usually the more safe you'll be in the long term, and the more you'll win in the long term, in my personal opinion. And again, my personal opinion. So even when you look at nature, when there's a fire, the red fire or the fire embers burn the forest, for example. They burn the greenery, they burn the trees, and then from that point, everything turns brown. It's dark, but then it grows again. There's roots on the bottom of the land. The land's brown, right? So at the end of the day, however, green plus red equals brown. Be brown. Do your best to have a ground mindset, a brown perspective. If you're always trying to hunt that green, you're always gonna be too late, because by the time something turned green, you missed the part of growth. Yes, you might still win. Yes, you might still get money. You might still make a good amount. But the people who got there before you, because they knew that and they did their research, will always beat you day in, day out, because they will win more because they got it when it was red. That's usually, when it's red, it's usually when it's at a discount. So for example, if a stock goes, say blows up from $1 to $100, for example, that blows up overnight, right? If it blows up overnight, the people, you say you buy it at $95 and it ends up, say, at $100, you earn $5 per share, you still made a profit. Good job. But the person who really won was the person who understood the intrinsic value of the financial vehicle, of the stock and finance at hand, or the person who understood that the intrinsic value of it. Could even be that they're a trader. They might not understand the actual intrinsic value, but they understand that this crypto or this stock or this financial instrument will blow up or go to the moon. They even have an intrinsic value, just a different type of intrinsic value, because maybe they're good at just trading. Maybe mine's more of understanding the company, reading the 10Ks, understanding what the company core values are. They're simply just trading an investment and understanding a certain psychology or algorithm. There's a lot of different strategies, but you have, whatever your strategy is, there's not a one size fit all. I'm more of a traditional stock investor where I look at intrinsic value, read 10Ks. There's other people who are more traders where they just trade a stock based on maybe their psychology or maybe understand candlesticks, etc. There's different ways to go about it. There's not one size, so I'll never scrutinize someone else. There's a lot of other people making money in different ways than what I'm well acquainted with. But what I do, one thing that is true for all of us, they understand, and whoever makes money typically, consistently, has a certain mindset of understanding what the intrinsic value is in hand, either in a traditional sense of understanding what to take care, what the core values are, what the finances are, if they owe money or don't owe money, or in an aspect of understanding mental perspective of, okay, you know, this is going to be a meme stock in about 3 days. I'm going to invest in this. This is pretty risky, but I understand that people will react to this stock and buy it and bring the price up. There's a lot of different strategies, and I'm not going to go into that, but the point is, there's still balance. Become balanced. Don't be a green stock investor where you only go after green stocks and you're always late. Don't always be a red investor where you miss a lot of opportunity because you're only buying. There's people who only buy penny stocks, but they never make any money. Or they're just like, oh, I'll buy it cheap. I'll buy it in the red anyway. But these companies never blow up or never even never thrive. Be balanced. Just because you buy a red company doesn't mean it'll succeed, and just because you buy a green company doesn't mean you'll succeed. Be balanced. The best way I found it to be balanced, in my opinion, and do your own research, again, it's just my opinion, so don't steer litigate me. I'm not giving advice, it's not financial advice, it's just my personal Conrad Layn opinion for Layn stocks, is I like to invest slow at a time, here and there. Some people, they buy stocks one time and that's it. Some people sell their stocks one time and that's it. I don't do that. What I like to do, I like to buy in a little bit every single day, or at least once per week, or once every 2 weeks, on a consistent basis, so that if the stock goes up, I'm good. If it goes down, I'm good. If it goes up, I'm good. If it goes down, I'm good. Because when it goes up, I'm buying at a higher price. Yes, I'm buying at a higher price. I get it. But then when it goes down, I'm buying at a lower price. Then when I go up, I'm buying at a higher price. And when it goes down, I'm buying at a lower price. I go up, I buy at a higher price. And once it goes down, I buy at a lower price. Because I have to actually build a balance. So what happens is, even if I buy the stock too high, I'll eventually buy it too low. So I'll get a good deal. And it'll just wait. For me personally, it's actually consistently balanced itself, because by buying high and low, you always get that middle number. Get what I'm saying? But if you only buy high, you're always overspending. If you only buy low or whatever, you're getting a good deal, right? Only if it goes up, and you're anticipating too much on it going up. Don't recommend that. It's really unhealthy for you. And if you get used to looking at the red and looking at that as a discount, look at that as like a coupon book. Look at this like that's your day for Cyber Monday, or you know what I mean, or Black Friday. That's your deal for stocks. When I see red, I get happy actually. No offense, I get really happy, because I'm like, I could buy these at a discount. That's how you have to do it. I'm not the most savvy. I'm not the most savvy person. I'm just a regular dude like you and all at home. And there's people who are way more sophisticated, but that's worked for me, and it's been working. I've been earning my income. No arrogance intended. You can do the same. You can do better than me. But I just try to invest a little bit at a time over the long term. And that's why for me personally, every strategy is different. I have to have strong conviction in the stock. I need to understand the intrinsic value and the core values of the company, so that if it goes up or down, I'm not ready to sell. Because what the problem is, some people buy a great company, but if they don't understand intrinsic value, or have a core value, or stick strong to their guns and keep the stock, they'll sell it as soon as it drops in money. And then someone like me buys it for cheap because you got scared and you sold it. But then guess what? It ends up going up maybe a year from now, maybe 3 years from now. Sometimes you gotta be in the long game. I'm in the long game. That's why it's different strategies. This is not a one size fits all, but for me personally, the long game, investing a little bit here at a time, not only I could buy it at usually a lower price, even when it goes up, I'll buy it at a higher price, but when it goes down, I buy it at a lower price, so it balances itself over a long term, and when it grows, I win, because it's more balanced. That's what I usually do. That's what's worked for me. Always your own research. I love you guys. I'm not your stock investor, not a stock analyst for you. I'm just a simple guy that's at home, a retail investor who's investing and want to build wealth. Love you guys. Follow me on Instagram at Conrad Layn. Subscribe to the channel, share this video, share this channel, and also leave any comments, questions below. I'm happy to assist, and I'll share more of my secrets. I'm growing my stock investor portfolio, and it's been great. You guys can do the same. Love you guys. Like, subscribe, share. Conrad Layn out. Peace.